Hi guys and welcome back to the Finanza portal. Today we're gonna talk about macroeconomics and more specifically how stocks can react to Fed hikes. This is a very important theme nowadays and investors and not only investors are looking at how the Fed could move. Let's start with an introduction here. First of all, we have to say that the S&P 500 index that represent in some sort of way the US stock market is experiencing one of the worst starts of the year of its history. So nowadays, a lot of investors are panicking and they don't know how to react. There are like so many uncertainties going on in the market, not only from an economic but also a political point of view. Well, like some comparables to this situation are, in fact, the Great Depression era, the big financial crisis, and the COVID pandemic period. So, three very important and bad moments for the economic history, for sure, and for the stock market. So now investors have to face a very difficult trio to defeat, and this is something, in my opinion, pretty unprecedented. First of all, there is a war, as you may notice, going on in Ukraine. Moreover, if you want to know more about it, just go and see my videos that speak about this theme. Secondly, people are talking about possible interest rate hikes by the Fed and central banks in general. And third, there is like a very important surging price for raw materials and commodities, more specifically and more importantly, oil, of course. So we have to say that I'm seeing a lot of like investors and also journalists saying that the last years have been very easy for investing, and my opinion is a little bit different. Well, nowadays we can look back at 2020 and say that the market has done pretty well after all, but were we thinking the same back in time? So during the COVID pandemic era, were we confident about the stock market? Well, I don't think so. But so in my opinion, the last couple of years hasn't been easy for investors and for the stock market itself. In fact, the market had to face the worst pandemic in a century. And now we are talking also about the biggest conflict in Europe since World War II. And also we are facing, especially in the US, but also in Europe, the fastest inflation in 40 years. So the situation, in my opinion, isn't easy, it's quite unprecedented. Well, considering history, it says that rate hikes bring more volatility to the market. But generally, the S&P 500 index has always been able to be higher after a year. So this means that more volatility could be a difficult and important factor to digest, but very often investors could hope for a bull run or a last bull run even after rate hikes. So, like, there could be some positive aspects also after rate hikes. Moreover, also, well, talking about history, here we are talking about history, of course, and past returns are not an indication and like for certainty of future returns, but history has not seen a particular underperformance even after rate hikes. And also the tech sector has not underperformed the other sectors after rate hikes. So we have seen at the start of 2022 a great sell-off, especially in the tech sector. But in the past, this sector has been one of the best, also after rate hikes. So it has generally overperformed the market and other sectors. In my opinion, and it's just personal opinion, not investment advice, do always your own research. This is just educational material. In my opinion, what could be detrimental for the stock market is the combination of rate hikes plus rising oil price. So, in my opinion, this combo could be very difficult to overcome. Last but not least, in a period of great uncertainty, well, in the US, there are midterm elections, and during midterm election and the year when these elections actually take place, there is more and more uncertainty about the market, and generally the market underperforms during this period due to uncertainty, political uncertainty. So we have everything on the table, I think. Rising oil prices, political uncertainty, geopolitical uncertainty, war, and also the possibility of rate hikes. And these things add more challenges to the overall picture. Um, well, in my opinion, I don't know what the Fed will decide. In my opinion, there will be hikes, but not so many and not as strong as the market had priced in the past. Of course, other things have entered the picture, the overall picture, like the Ukrainian war. So, in my opinion, that's a very difficult moment from one side. On the other side, I think that these moments are very important for investors and people in general, especially people like normal people that invest in the stock market, because like in this difficult period, you can learn really a lot. Of course, having a strategy, having a plan is fundamental in my opinion, and also having the possibility to get as many news and information as possible and thinking about it like rationally is very important without panicking, of course. So I don't really know what the Fed is gonna do. There will be hikes for sure, not so many, and without not such strength in my opinion. So that's only my view, of course, and I can be wrong for sure. So thank you very much for listening. Like the video if you liked it, and subscribe to the channel for other news, other analysis, and other very important information that I want to speak and talk with you. Thank you very much, and bye. See you.